All right, welcome back to Yahoo Finance's live coverage here at Davos, Switzerland at the World Economic Forum. Lots of focus on a potential economic soft landing, the direction of rates and markets, you name it. We have a very great guest to talk about all of those things. Stifel CEO Ron Kruszewski. Ron, it's been a while. Good to see you in person.
It has been a while.
Is this your first Davos? You're the CEO of Stifel, what, 27 years?
27 years. I finally made it to Davos. What do you think? Okay. Look at this. I mean, I'm coming back.
It's
all right?
nice. All right. Well, good to see you here. And give us your sense on how fast the Fed you think will move in terms of cutting rates. We can't get a real great answer. Some people say we might get 4 rate cuts this year, some are in the 6 camp. How do you see it?
You know, I think I'm probably on that. Well, I am, that the Fed will cut less than the market thinks, and not as soon as the market thinks. So you'll be able to have me back on in March and say, hey, you were dead wrong. But there's a couple, we see it that they'll cut toward the end of the year. And the reason why is because the economy is doing well. Earnings are going up. The definition of a soft landing would be that the Fed could cut while the economy is strong. But the reason I tapped those expectations down a little bit is that the Fed really was concerned about inflation, witnessed the 500 basis point increase. It was every other month we were raising rates. And I don't see the Fed just saying, oh, we've solved the problem by March. I don't. Now, again, I can be wrong, but I think not. So we'll see.
But it sounds like you are optimistic about a soft landing at the same time.
You know, I am, and not to make anyone feel depressed or anything, but, out of every hard landing starts with a soft landing, so you can think about that. And the answer is that, yes, everything is set up, but there's so many variables that we don't know, and mostly geopolitical, that can unravel the best laid plans of mice and men.
Why did you feel the need to be at this Davos after 27 years?
I think I wanted to come, this is interesting, and Davos is, it's phenomenal, all the events, but it's also sort of the epicenter of globalization. And if anything that we're facing in the world today, it's the unraveling potentially of Bretton Woods and the deal with the United States made. We will protect the world, we'll open up markets. And I was interested to see how that would play here, and while it's not number one on the agenda concerns, in every meeting I've been in, that's what people are talking about, is what happens in the South China Sea, what happens with Putin, what happens with the United States in an era where we've had 80 years of relatively calm geopolitical. I mean, you have your regional skirmishes, but I would say that that's interesting. And that was what I was here to see. What were they going to say?
What does it mean if the U.S. becomes more isolated? Should there be a change in the administration? What does it mean to markets?
Well, I mean, again, we've had 80 years of cooperation amongst the countries that are part of Bretton Woods, that agreement. But if you think about it, if you start throwing sand in the gears, which is what would happen, protectionism, tariffs, these are all things that are going against that. And to me, it'll impact prices. All right, it won't be as easy to have container ships, just in time, going through the Suez Canal or the Panama Canal as efficiently as they have. If we change the fabric, which was the United States protect the seas and you trade with me fairly, that's. But again, you're supposed to think big here at Davos, and that's kind of what's being talked about.
Yeah. So when you say that geopolitics is the thing that maybe could unravel the markets this year, what do you think is the riskiest of the? I mean, there's a lot, unfortunately, to choose from right now. Is it the U.S. election? Is it the wars that we're seeing, which haven't seemed to derail the markets yet? What do you think?
If I knew, I wouldn't be sitting here. Okay, I would be doing that. It's always something you don't expect that would do it. So I don't want to try to predict. But for example, something that really impacts oil. So an oil shock would be something that's not in the markets. Also, outside of geopolitical, again, I'm not so sure that inflation is completely tamed and you have no rate decreases, that the market's not expecting that. But generally speaking, I'm optimistic about 24.
Ron, we have a lot of new people coming into the Yahoo Finance ecosystem, a lot of the next generation investors, this is their first time interacting with you. How do you become the CEO of a big bank that's not on Wall Street for 27 years? Clearly you have some secret that you can share.
Well, you start when it's a small bank, okay? So when I took the job, no one else would take it, and I always tell the story. There were 4 candidates for the job, including me. The other 3 turned it down. So I was able to get the job. But Stifel's grown from 100 million in revenue to 4.5 billion, and what I would say is that all the young people that are watching this, you can become the CEO of any company if you so put your mind to it. I'm very encouraged, especially the young people in our firm that are learning, especially this AI and all of that. That is such an opportunity for young people to learn to be more productive than I ever was.